Generally, IT stocks have been underperformers over the last few days as the earnings season for the sector has not begun on a good note. Peers like TCS, HCL Technology and Wipro have disappointed the street on the revenue parameter. Tomorrow, it's the turn of Infosys. What will it deliver? Sandeep Muthangi of IIFL Institutional Equities joins in. Hi Sandeep, good afternoon. Walk us through your key expectations from Infosys this quarter, and would you expect less now from Infosys considering the performance of its peers?
Hi, thanks for having me. Good afternoon to you too. The key trend or the theme of IT this quarter has been that demand trends are a bit volatile. That trend we've seen happening again and again, almost every company saying something on the similar lines. So I'm estimating Infi to do a 2.5% growth on a constant currency basis. I don't think that will change because we've already seen at least HCL Tech having a fairly good revenue growth. So I still am looking at Infosys doing a 2.5% kind of a number on a constant currency, but of course there's cross-currency impact and the reported number could be 0.5%. What I believe is if they do, maybe 0.5% lower or something, one can appreciate that. But if the results are, say, less than 1% or 1.5% revenue growth, then I guess one will be negatively surprised. On the margins, nothing much happening. They will have impact of cross-currency headwinds. Broadly, they should be able to offset it with some operating levers. So I'm looking at largely stable margins or a 50 bips decline. So that's essentially what I'm looking for the quarter.
Hi Sandeep, good afternoon. How detailed do you think the capital allocation policy will be? And what is it that you would like to hear on that front?
Yeah, so expectations are running high on what they will say about two things, right? One is whether they'll say any concrete stuff on their strategy of where they will invest, where the growth areas will be and things like that. And the second thing is whether they will be, revisiting their policy of share buybacks or dividend payouts, etc. Unfortunately, I don't think there will be any big bang announcement around the capital allocation or dividend payouts or repurchases and stuff like that. They could probably have a lot more detailed commentary on how they're looking at their acquisition strategy. We've already seen one big acquisition happening. Probably they'll have a little more clarity on that. Essentially what one will be looking forward is whether they will be giving a guidance or not for the next year. I think they will. And again, what kind of indications will there be about next year's growth estimates?
Okay, so let's talk a bit about the guidance. What would be your expectations? And speaking about guidance, what will constitute a hit or what will constitute a miss in terms of its outlook for next year?
Yeah, so this is where we talk about arithmetic, right? So the last 2 years, if you look at it, they've been doing about 2 to 2.5% growth on a quarterly basis, and this is adjusted for acquisitions and cross-currency movements and everything. So if they manage to do a similar number despite the slightly volatile environment, then we are looking at 11% growth or 11.5% growth on a constant currency basis. And this means they'll do exactly the same growth as what they've done this year, which has frankly been quite okay. And if we assume that a lot of investments they are doing on the sales will accelerate the revenue a bit, then we will be looking at a 12.5% constant currency growth number for the next year. I think anything less than 11% will be a bit of a negative surprise. And anything in the teens, revenue growth in the teens, even if it's at the top end of the guidance, will be a positive surprise.
So you expect the company to guide for, around the 11% mark tomorrow in terms of constant currency FY16 revenue growth?
10.5 to 12.5.
Okay. Sandeep, this month naturally hasn't been kind to all these IT stocks, but amongst the entire pack, it's Infosys and TCS which have actually fallen the least. So what is now the trajectory that you see for the stock itself? What's your rating on the stock? And, how much would it be influenced by what comes out tomorrow?
Yeah, so these are good businesses, right? So the reaction to a single quarter's negative surprise should be limited, that way. But essentially what we are seeing is there is definitely a change in the demand environment compared to what's happened over the past, compared to what they've been saying, say, even 4 or 5 months ago. Even during the December quarter, post-December quarter earnings, we've seen management being fairly constructive on the kind of demand environment for FY16. That's changing a bit, and I think the reason is, one, on the whole digital side, deal sizes are not very large. and it's still a trickle in FY16. So I think that's one of the issues where some part of the growth expectations have changed a bit. And the second thing is this slightly volatile nature of the discretionary spend per se. So definitely expectations on growth are a little moderate compared to what it was 4 months ago. So as you rightly said, the stocks haven't corrected much. The valuations, at least for the top guys, are still not cheap. So I think we'll see a repeat of what happened, say, last year with TCS, where valuations derate a bit and earnings growth is still not strong enough to give any runaway performance in the stock price. So I'm essentially looking at anywhere between 5% to 6% upside for the next year.
Okay.
In these large companies.
Okay. So finally, which one do you think will be the outperformer? Last year it was HCL Technology and Infosys. This year, if Infosys managed to meet your base case assumptions, then which ones do you think will outperform, considering we'll have all 4 earnings in?
Yeah, so essentially if you look at the past couple of years, the re-rating has been a big story in Indian IT of what's driven outperformance for companies. We've seen that happening with Infosys. Infosys was more of an event-based re-rating anyway. And we've seen it happening with Techem, HCL Tech and a whole bunch of mid-caps, right? I think re-rating has still more legs to the rally. And the company that I still see where re-rating could benefit is HCL Tech. Results have been pretty decent. The margin worry that was there in the medium term has already got priced in. So HCL Tech I still think will be the best performer for next year. We'll probably see a repeat of what happened last year.
Okay, Sandeep, we'll leave it at that. Thanks so much for joining in. So those are the key expectations from Infosys, a 2.5% constant currency growth in Q4. The company is likely to guide for a 10.5% to 12.5% constant currency growth in FY16. So these are the 2 key numbers to watch. And in terms of capital allocation, they could give you some direction about sense about what the acquisition strategy could look like for the company. But don't expect any big bang announcement, at least in terms of higher dividend payout, etc. Infosys stock is down 1%.